Okay, Monday, July 27th. This is the Anderson Report. And thank you, everyone, for joining us this evening. We're going to do a little bit of a recap of market, the market today. And this is going to be a very action packed week. So we'll lay out a little roadmap for that. So stocks had a certainly a respectable day, maybe a respectable day plus today. Halted their 2 day slide from Thursday and Friday. The Dow Jones average gained a little bit less than 0.5%, gained and to close, let's see, 26,584. The Dow is holding its 200-day moving average. It's about it got about a 1.3% margin over its 200-day moving average. That's about 350 points. And still, it closed above 27,000 one day last week. Then it sold off Thursday and Friday. It's about 400 points from there. I think we need a catalyst from the earnings calendar maybe later in the week to make another serious assault at 27,000. The June highs are even higher than that at 27,572. That's about 1,000 points or 4% away for the Dow Jones Industrials. Now, Nasdaq had a very nice day, up 1.7%. Nasdaq had declined like 3.1, 3.2% over Thursday and Friday last week. So it recouped about half of that 2 day decline that it had the last 2 days of last week. It went out at 10,536. The NASDAQ is up 4.7% month to date. I didn't mention the Dow. The Dow is up 3% month to date. And the NASDAQ will be seriously tested this week as we get earnings from Facebook on Wednesday after the close, and then Google, Apple, and Amazon on Thursday after the close. The S&P 500, also a good day, up 0.75%. The S&P went out at 32.39. That is about a 6 or 7 point margin above its highs from early June. That's a very positive sign that the S&P held the 3,200 level on its pullback late last week. It was down about 2.2% combination Thursday and Friday. It's up 0.75% today. It's up 4.5% month to date. 4 trading days to go in the month. So I would say that we're probably going to have, look, anything can happen. We could have a 5% sell off any given day. But the likelihood's increasing that the NASDAQ, the S&P, most likely the Dow, are headed for a positive month. Now, the Russell 2000 had a nice day also, up 1.2%. It is up 3% month to date. Also, somewhat significant, the Russell is holding its 200-day moving average, which it got above about 2 weeks ago for the first time since February. The Russell is 1.2% above its 200-day. It's closed above it 9 days in a row, but some of those were just by the smallest margin possible. So that 200-day moving average for the Russell went out at 1485, just under 1485. The 200-day moving average is 1467. You got to watch that level on any pullback for the Russell. The Russell and the Dow are just about the same percentage above their respective 200-day moving averages. Market breadth, was decent. Advancing issues led decliners by 3-2. At the New York Stock Exchange, maybe just the smallest hair less than 3-2. And on the Nasdaq, advancers led decliners by a little bit better than 3-2. Clearly a positive sign that Brett has improved a lot over the last 2 weeks. And we beat back those negative breadth numbers that we had on Friday. Although, even with Thursday's decline, as we emphasized Thursday night, the advanced decline numbers on Thursday, even with those declines, were pretty good. It's been holding up well. The Russell certainly speaks to that. Crude oil had a decent day, up 1%. We've been talking about crude oil a lot. We thought it was in this 38, 39, 41 range. It got above 41. It held it on its pullback Thursday and Friday. It was up 1% today, 41.66. We have earnings from Exxon and Chevron Friday morning. That those will be important for the entire energy sector. Obviously, both components of the Dow Jones Industrial Average. Now, of course, the talk of the day and the weekend, and probably tomorrow, is the rally in gold and silver. Gold closed at an all-time high on Friday. I think it may have closed at an all-time high on Thursday also. And that prior all-time high was back in 2011. Some people will say it was in August. Some people will say it was in September. I think it depends on whether they were looking at spot prices or futures prices. It doesn't really matter. Gold was up 2% today, went out at $19.35. And I did check just before this broadcast started. Gold was building on that rally and was trading up another $6 to $7 in Globex trading. Now, silver is having a much more explosive move, but is nowhere near the levels that it got to in 2011. I don't want anyone to interpret that I think that it's going to the 2011 levels. Those were extraordinary levels for silver. Silver actually peaked in March of 2011 at about $46, $47. It then sold off, tested the low 30s a couple of times, rallied again in the fall, got up to about 38, 40-ish, maybe 41 or 42. I don't have the chart like totally embedded in my mind yet. In August, September, when gold made its peak. So it's a little bit interesting to me that silver had that big rally late in 2010, early in 2011, peaked in March of 11, sold off, rallied again, didn't make a new high, but got up still in at least the high 30s when gold peaked at just under $1,900. So silver was up over 7.5% today. It went out at $24.50. I checked before this started. It was trading 24.90, 25.10, bouncing around quite a bit. But another 50 cents higher. So, look, silver had its big move the beginning of last week. Got up above 19, got up above 20, went right to 22 and 3/4, 23, traded in that 22 and 3/4, 23 and a quarter range for literally like 3.5 days, from let's say midday Tuesday to the end of the week. On the chart, that might look like a pennant, which is a pattern that you will get sometime during a big bull market run in either a stock or a commodity. So gold is, I thought silver would have to trade in that range for at least a few more days, maybe the middle of the week. It obviously didn't wait. It had a big move right out of the chute this morning. It probably started in overnight trading. Uh, and it, who knows what it'll be doing tomorrow, but it's scratching the $25 level as we speak. So, why gold and silver doing that? I just think you're looking at um, very high levels of sovereign debt being issued by countries all over the world. A lot of it for coronavirus stimulus packages. Although we don't really have any inflation, which of course back in the 80s when gold had its big run, uh, it was always thought to be an inflation hedge. It's also kind of a hedge against chaos, turmoil, heightened levels of uncertainty. Although we haven't seen it's rallying while the markets are rallying, which is a little bit contra to the way it operates a lot of times. Um, it's just everything about it is right now. It's a lot of it's technical, and there are some people that if you were to draw some continuation lines on gold, some decent technical people thinking it's maybe going to 2200, 2300. I'm not going to argue with that. I think that is, I understand exactly what they're looking at. I just have to be a little bit careful how I say that on this stream, because I can't come across as promoting that. But it certainly looks like gold is going higher. I'd be very surprised if it doesn't go through 2000. I think so, and although I think silver is going higher too, it was up 7.5% yesterday. It had a big move last week. At any point in time, you could have a little knee jerk reaction to the downside in silver. Um, but it certainly looks like it's going into the high 20s, might even scratch 30. The timing of it, who knows? Um, John, I got a question here in the chat, and I had a little bit of a longer uh, description on gold and silver than I would normally get. I just want to address one other thing. I had a question on Twitter today from someone about what silver stocks would you think about buying? Well, I can't really talk about individual stocks. I am a registered person with FINRA, which is the regulator of the securities industry. I do not have retail clients. I have no interest in having retail clients. I'm basically a institutional person. I do executional business for institutions and brokerage firms. Um, but I can't really talk about individual stocks other than to comment on how they're trading. Uh, but I would look at the silver iShares. That is the tradable entity. It's an ETF, but it's not really a traditional ETF because it's a BlackRock product. It's designed to track the price of silver. And if you look at it right now, it's going to be a dollar. It's going to be maybe $1.50, $2 below the price of silver, but that doesn't really matter. The chart looks identical to silver, um, and I'm not sure exactly what contracts they own. It would be or what products they own to track the price of silver. I'm sure they own some futures contracts. It would be very easy to do research on it. The symbol is SLV. It's the BlackRock iShares Silver ETF. Although it's not an ETF in the true sense of the word, they don't. It's not a combination of stocks. It's not a collection of stocks. It's probably a collection of futures contracts and or other things tightly tied to the price of silver. If you bring it up, it may also show you some comparables. There's an MSCI silver ETF that might include silver miners and silver companies. Um, and so I just wanted to address that. Now, Is it me or are precious metals moving too fast? Silver's moving a lot faster than gold. Gold is kind of grinding higher. I mean, gold started the day at 1920. It went out at 1940. It might not have been up 2% today. It was probably up 2% at one point during the day. I guess it went out at 1935. Um, Gold is grinding higher. It's at an all-time high. Silver's nowhere near an all-time high. It's got a much more of a sharp increase, certainly last week, early in the week, and today. We'll just have to see where that plays out, and if silver caught a day or two of heavy selling, where the support would be. Um, so nice day in the small caps. Yes, it was. The Russell was up 1.2%. And my opinion on the GOP stimulus proposal. Well, of course, they did not put a payroll tax cut uh, um, opinion, a payroll tax cut measure in there because it just will not pass the House. My understanding is that the last I saw that Steve Mnuchin is meeting with at least Chuck Schumer, possibly also Pelosi this evening. I know that Schumer was pushing back hard on it on the floor. I think what the Democrats want to do is extend the extra $600 employment unemployment kicker for at least 6 months. And what the Republicans want to do is scale that back significantly. John, I haven't seen every single detail in their proposal. I think it's still a little bit of a fluid situation. I know it was being rolled out late this afternoon. I'm going to take a good look at it later tonight, and or tomorrow morning if there's some changes to it. I think it's still a fluid situation. I think something will get passed. I think there's going to be a lot in it that everyone doesn't like because there's going to be stuff in there for the Democrats to get them to vote on it, which a lot of the tax and budget hawks are just going to have a difficult time with. And then the Democrats are going to scream bloody murder over the fact that we're giving more assistance to um, businesses and that we're not giving enough to, and we're giving assistance to local law enforcement, and we're not giving enough to local schools, and the giveaways from the unemployment kicker side of the $600 per week aren't enough. If we scale that back, it would never be enough. If it was a $2 trillion program, that wouldn't be enough. But they will eventually make a deal on this. Uh, it will have plenty of stuff in it that people don't like, but it's somehow got to get through Congress. So that's just it's a little bit of a prisoner to the process right now. So there was some interesting economic data today. We'll go over that quickly. The durable goods report for June came out. It was very interesting. It was up 7.5%. That was a beat on consensus. And that was 7.5% over May, which was up 15% over April, which of course was like the just absolute do nothing month. Now, what I find very interesting about the durable goods report is that it's mirroring very closely what we saw from retail sales. Okay, retail sales was up 7 or 8% versus 18% the prior month. Okay, so we're seeing the economy rebound very sharply off the total shutdown, and even still a little bit more off the partial reopening. The key numbers will be for July because the reopening has stalled a little bit. So Tuesday, we'll get a consumer confidence number from the conference board. The conference board puts out one consumer confidence number per month. The University of Michigan puts out one early in the month, and then they revise it late in the month. The University of Michigan number that came out, I think it was about a week and a half ago, was uh, a mild beat. I think they revised that number later in the week, but I have to check. Um, Now on Wednesday we will get pending home sales. Every piece of data that's come out on the home building industry and on home sales has been very strong over the last uh, cycle, or I should say, really the last 2 to 3 weeks. Sometimes these numbers lag depending on exactly what they are. This is going to be a July number. And pending home sales are sales that have gone to contract that haven't closed yet, that anywhere from 3 to 6 weeks down the road become final sales. Final sales that we got late last week were very strong. Um, and with mortgage rates at 3%, and with the interest that there is in people leaving major urban areas and potentially then, uh, moving out for a little bit less, a little bit more space and a little bit less chaos. Um, if you look at the home builders, and if you look at all the stocks related to the home building, home buying, home furnishing area, even Whirlpool's numbers a week ago were very strong. So I'd expect that number to be good. The Fed is on Wednesday. The Fed will give its interest rate decision at and policy statement at 2 o'clock. I say end policy statement because clearly they're going to leave rates unchanged at just a fraction above zero. And I'm sure that the questions in the Q&A will be the focus. I'm sure they'll ask about, the lending programs, the size of the balance sheet, at what point in time might they consider unwinding. They probably are still in the process of building, I would think. Okay, so, and then of course, Thursday morning, we get the the advanced look, which is the first estimate or read, if you want to call it that, on Q2 GDP. And the estimates are all over the place, anywhere from down 15.15% to down 50.50%. The consensus is for down 35%. I think it's probably going to be a little bit less than that. And the only reason I say that is I see a lot of numbers. I see a lot of big revenue numbers for big companies reporting from the second quarter down about 30%. Okay. American Express, a huge barometer for not only personal spending, but business spending also. And that came out with their second quarter Friday morning before the opening. Their revenues down 29%. Hasbro, the toy maker, very different business, obviously, but still some consumer spending in there. And probably not a giant online presence, although I'm sure you can buy any of their stuff on Amazon. They reported their second quarter earnings, I believe, this morning. Second quarter revenues down 29%. It's almost eerie. There's one other company that reported earnings last week for the second quarter, and I believe that their revenue numbers, a big consumer products company, it might have been Coca-Cola. They might have been down 23% or down 27%. I just think this GDP report is going to be down somewhere between 25 and 30%. I could be way off. That's just a guess on my part. Down 25 to 30%, maybe the higher end of that range. But again, obviously it's a backward looking number. It's a very back looking number right now, even though we're only 3.5 weeks into the third quarter. Clearly we're trying to chart out We've charted out a V recovery for the stock market. Now it's the economy's job to duplicate that. Okay, here's a question in the chat. Favorite market sector? Well, let's look at the sectors how they acted today, because it was kind of we have a two-pronged pockets of strength going on today. Clearly, the big internet stocks, what I call the stocks that have been driving the internet traffic trade all year for a few years, and even in hyper mode uh, from the market lows in late March, are the Microsoft, Google, Amazon, Netflix, anything to do with increased internet usage, what I call the internet traffic trade. Uh, and in the S&P 500 sectors, that's really communication services and information technology. Information technology was the best sector today, up 1.6%. Materials, the second best sector, up 1.4%. Okay. So we got to watch that materials sector. That's a heavy duty cyclical part of the economy that usually uh, precedes a lot of other parts of the economy kicking in. Okay. There are a lot of other sectors that were positive today: communication services, consumer discretionary. That's consumers having a little bit more money in their pocket. Healthcare, all up about 0.75%. One sector that failed a little bit, financials, down 0.8%. I think they were down 1% on Friday. Yeah, bond yields are down a little bit. The yield curve has flattened a little bit, not alarmingly so. The 10-year Treasury yield is at 0.6%. I think that's too low. I'd like to see it much closer to 0.8 and get between 0.8 and 1. Probably hard to do that with the Treasury buying a lot of, with the Fed buying a lot of Treasuries right now. But I'd like to see that 10-year Treasury and even the 30-year get up a little bit. Cloud stocks are ridiculous. They are. They're going to continue to be. But just look at the action in Microsoft last week, and I spoke about this at the end of last week. Microsoft's cloud business had been growing. It's a key metric right now among the analyst community. It had been growing above 50% for the last 3 quarters. It grew at 46, 47% last quarter in the earnings report they announced on Thursday. It was either Wednesday or Thursday. The stock did not have a good reaction to it. It was down about 4.5%. They reported Wednesday night. It was down about 4.5% on Thursday. It was down a little bit on Friday. It held the $200 level, which is probably a positive. Now, look, growth in that sector in the mid 40s to high 40s is still very, very, very strong growth. But because it wasn't as high as it had been the last few quarters, some analysts, I should really say more appropriately, some momentum investors will look at the rate of increase in growth, like it's called the second derivative of growth, the rate at which growth is increasing. And it was increasing 50%, 52%, 54%, 55%. And when that rate of growth slips a little bit, even though still to a very, very high level, a lot of momentum investors are going to take some profits in the stock, because they're going to say, ooh, boy, I wonder if maybe now their growth rate is slowing. Well, it can't grow at 50% forever, but that's just the way momentum investors play their game. And yes, all the cloud stocks are hot. They're going to continue to be hot. It's probably still a growth part of the business, the one part of it that really has to be refined for much, much, much larger scale than was going on in the cloud even 3 to 5 years ago, even probably a year and a half ago, is the security part of it. I'm not up on what all the security names are, but I believe this F5 company or FireEye both had decent earnings recently. I don't know if they are still the leaders in that cybersecurity part of their business or not, but I know that those are stocks that have been in the past always talked about as ones to watch in that space. Um, so sectors, look, the materials have been on days when the market's been up. You got to watch them because, and that's it's a it's a diverse group of stocks that's in that material sector. It's paper and forest products. It's steel. It's chemicals. It's there might be a couple of railroads in there. Maybe not railroads, obviously, but it's the stuff that everything that goes into making heavy duty stuff, especially down the road, much later in the year, if we really make significant moves toward bringing some of these supply chains back from China and from maybe even other parts of the globe, these material stocks, as well as the pharmaceuticals, will be potentially major beneficiaries of that. So, other big earnings coming up. Advanced Micro Devices reports tomorrow. I mention it because Intel reported last week one of their big next generation super chips that they've been very excited about is going to be delayed by a year. It wasn't even going to come out in 21 anyways, I think. But AMD the AMD actually rallied, traded to an all-time high twice last year. For everybody that knows anything, AMD used to be by a mile, the stepchild at best to Intel. Okay. Intel was a huge, unbelievable growth name, wildly successful company. Apple went off their program, announced that I think earlier in the year. I think everybody expected that was probably going to happen. But anybody that knows anything about streaming or that knows people that play games competitively online and or that does streaming podcasts that are probably much more professionally produced than this one, but we'll get there, knows that this Ryzen processor that AMD makes is the hot processor on the market. It's for anyone that's doing video. Everyone wants this Ryzen processor in their laptop if they're using a laptop or in their PC. AMD is it's way up. It's way up from where it was 3 months ago. It's just a stock that has to be watched, if nothing else, as a barometer for the entire for the semiconductor market right now. I mentioned that we're going to have Microsoft report Wednesday. We're also going to have Starbucks report either Tuesday or Wednesday. Starbucks will be interesting because it's a little bit of a hybrid consumer product, a little bit consumer durable, a little bit consumer discretionary. Do we need coffee every day? Yeah, we need coffee every day. Do we need to spend $6 on a latte? Maybe not. It'll give it clearly their numbers are going to be down. Okay. It'll give us a good idea of where the consumer was in the second quarter. It'd be interesting to see where they come in relation to that down 29% level that a number of others have thrown out. Boeing is going to report this week. I don't have the exact date right in front of me. A little bit of cautious news on Boeing today. They're going to slow down production. There's a delay. Their problems right now aren't just with getting their 737 MAX back on board. It's these contracts that they have out to people that now don't want to take delivery because they just don't know when international travel is going to get back online, period. And when it comes back online, what is the uh, what are the traffic rates going to be for international travel compared what it's been for the last 3 to 5 years? I think it's going to take a couple of years to get there. You know what, a whisper. I agree with you. I like Dunkin' coffee also. I just had to mention Starbucks because their earnings are coming out, and it's going to get a lot of focus. Um, so Boeing was down a little bit today. I almost thought it was going to be down more when I saw the news. Um, but also later in the week, GE will report, very tied in with the aerospace industry, in the process of potentially making a significant comeback under Larry Culp. The stock traded as high as $13 in February before the whole coronavirus sell-off started. The stock has been very slow to recover. I think it's between 6.5 and 7 right now. And then on Thursday night we're going to get Amazon, Apple, Google or Alphabet. After the close, believe me, it will be a big event. Okay, between their earnings and their conference calls. And then Friday morning, if you haven't had enough, we're going to get earnings from Cat Tractor, Chevron, and Exxon. Three just huge multinational US based members of the Dow Jones Industrial Average. Uh, and Clearly, Exxon and Chevron will have a lot to say about the international oil market. And Cat Tractor I think people should pay attention to what Cat Tractor says about their exposure to China. They were one of the first big deal companies to not just go to China 20, 25 years ago, but they went all in and they benefited from it tremendously for 20 years. And the last couple of years, they've been, getting taking a little bit of a hickey from it. It's much look, if you're manufacturing tennis shoes or sneakers or clothes, it's much easier to think about moving your manufacturing from China to another country in the Pacific basin or to somewhere else. If you're Cat Tractor, it, it's a lot tougher decision because you're talking about big time uh, manufacturing operations. Okay. Look, the market's off to a good start. It was off to a good start last week and it got hit the end of the week. I think that, you know, a lot of what uh, it's a big week for the market, big earnings. And I just think these four stocks, Facebook Wednesday night, Apple, Google, Amazon Thursday, it's going to have a lot to do with how the market acts, uh, you know, for the remainder of the third quarter. Any chance we delist Chinese companies before the election? Yeah, sure. Look, there's always a chance of that. I mean, if you have Chinese companies that have big problems like Luckin Coffee did, uh, they got delisted pretty swiftly from Nasdaq. I think Nasdaq has already taken some measures aside what the SEC has current mandate is on listing requirements for ADRs from international companies. I don't know that there are specific requirements for Chinese companies away. You got to realize when these Chinese companies list over here, they're going to list as ADRs or as SDRs, and they uh, that's going to be tightened up. Now the SEC is looking at whether what changes, they might want to make. The SEC is a very slow moving organization. They're going to look at it and look at it and look at it and look at it, and eventually probably tighten up the procedures for Chinese companies listing ADRs or SDRs in the U.S. The Nasdaq went beyond that, and they made a decision to tighten up their own requirements, not wait for the SEC. I think it was a pretty smart move by the Nasdaq. So I really want to thank everyone for watching the program. This is the Anderson Report on YouTube. I always tweet out the link to it. If you have not subscribed yet, please subscribe. Hit that little red subscribe bar. Hit the little bell next to it, and you'll get notifications of when our next broadcast is. If you're watching on Periscope, or it's more convenient for you to watch on Periscope, it's TJ Anderson 12. My Twitter handle is TJ Anderson 1. And please subscribe. Shoot in any questions you might have. It's very likely there will not be a broadcast tomorrow. We'll be back at it again Wednesday night. And of course, certainly on Thursday with the big earnings from those companies. So thank you very much. Have a nice evening. If you're in the East Coast somewhere, survive the heat. And we will talk to you again soon, but very likely not tomorrow night.